Hello, everyone. Chris Amadeo here with Tom Blass and our special guest today, Joe Mattam. How you doing, guys?
Good.
Doing
How
good.
about you?
Doing, Chris.
Not bad, guys. Not bad. I'm glad we finally got you on here.
Thanks for having me.
What job title do you give yourself? Or you're a trader, you're an investor. What do you call yourself when you introduce yourself to people?
I would say that I would say that I'm an investor. I mean, most of my income is derived from that. So, I mean, if they ask specifically, I'd say the stock market because you have your different facets of investing. But stock market is what I would say I'm a stock market investor.
So would you consider yourself like a value investor, or do you invest more in like risky stocks and things like that?
Most of my income, it comes from this. I don't do too risky. Now, I see plays like, there are things that everybody sees, the AMC, the GameStop, crypto, all those things, right? I wouldn't tell you that I'm going to put a large portion of anything of mine into that. I will play it, right? But, majority of the things that I have are, I'm pretty NASDAQ heavy. I like a lot of tech. So I like Microsoft, Amazon, Apple, which are pretty much safe bets, probably at least one of us are using an Apple or a Microsoft computer, something like that. So I try to go with the safe bets, really. But, I wouldn't say risk is not really my thing. I will get in once in a while just to not miss the ride, but it'll be a small portion or a small percentage of, everything.
That makes sense. So you try to in diversifying like the sort of idea of risk, you try and lean more to the safer bets, and you throw a little bit into the riskier ones just to see where they'll go, but you don't make any real big risky plays like that.
Thing is that I know guys that, at the start of, not to like shift away stocks or anything like that, but I know a guy who turned $1,000 into 240 grand off of Dogecoin, right? Now I know that if he did it off 1,000, God only knows what could be made off of more than that. But at the same time, someone at some point will be left holding the bag at the top, right? And you never know when that's going to be, where everything starts to decline. My thing is I try to purchase a stock, and if I can, I'm not saying this works for everybody, but I would like to take advantage of capital gains tax, right? So if I hold it a year and a day, I can beat the tax rate by a decent percentage, somewhere from 40 to 15%. So I try to do that. And you can only do that with companies. For example, if I see everyone talking about something, when pot was starting to get legalized, things like that, everybody started pouring into those stocks. That was the big play at that time, but I stayed away from that because I was, there are these fads that occur, and I don't want to get caught up in that and be the guy that's left holding the bag at the top who purchased at the high price when when the big boys and the whales are getting out. I'm the one standing there waiting forever to get my money back if and when I get it back,
So you say something about a year and a day, though. So can you elaborate on that a little bit so
Yeah.
I can understand what you mean by holding on to a stock?
Absolutely.
Now you're talking a stock, right?
Let's say right now Amazon is approximately $3,700 a share, right? So let's just say at 3 shares, that's pretty much $10,000 investment, right? Let's say it goes up to $4,000 a share, and let's say you're now $12,000, right? So you're gonna have to pay the tax on the $2,000 the moment you sell. So you guys were touching on this on your last episode. And you guys are right. If you sell right away, you have to pay you're gonna get taxed on the difference in the amount you made. So that $2,000, the difference is if you sell the security from let's say from a moment after you buy it till 364 days later, you're gonna have to pay around a 40% income tax rate on that money. But if you hold it for a year and a day, capital gains tax rate kicks in and you are now taxed at 15%, right? So on 40% on 2,000, you'd be at what, like $800 taxes, I think you'd have to pay, as opposed to if you let it kick in the capital gains, you'd be paying $300 in tax. So my thing is, if I find a good company that is going to be around, and I don't see it fail. I mean, but there are many times where things do fail that are big companies. You do have places like BlackBerry. Every single person ever on earth had a BlackBerry phone at one point. You never thought it was going to fail. But I do try to stick with companies that I think that are not going to fail, and try to ride it out if I can. And if it's really good, like for example, Apple, I've pretty much been trading Apple the whole time that I learned to trade, which is about 20 years now. I've pretty much held Apple at some point in my portfolio almost the whole time. And Apple has just gone up. You have your rides up and down, but that's why first question that you asked me was, what would I call myself? That's why I would say it's more of an investor, because when I first started, I would get scared of things, right? I would get scared if the market started to go down. Let's say America gets into a war, market starts to tank right away. And what happens is if you haven't done it in a long time, you have a knee-jerk emotional reaction to sell because you see, like, think about your savings account just going down, right? But at this point now, I've learned that that's part of the game and to kind of just try to ride it out until better days. I mean, when coronavirus came, stock market tanked initially, and you could see now that things are like coming back on the upswing. So, it's about sticking with it. I mean, that's
Right.
what I believe.
So the one thing
Sure.
I do want to say, I want to give you a disclaimer quick. You are not an accountant. You are not a financial advisor. I forgot to do that when we first started this
Yes,
episode.
I most
And
certainly am not.
let's just get that straight now. Joe Mattam is not an accountant or a financial advisor. I do want to understand this then. So with stocks, and I don't know if it's stocks only. So if you purchase Amazon, Netflix, Credit Suisse, JP Morgan, let's just say I buy it today, July 7th, 2021, and I make a $20,000 investment in that. And then a year goes by and my portfolio is worth $30,000. It's July 7th. Now, if I wait until July 8th and I decide to take my 30,000 out, I have a profit of $10,000 there. So now I'm paying capital gains tax of 15% rather than 40% like a day trader
Absolutely.
tax.
Yes, that's the advantage of the capital gains rate. I mean, that's a big difference when look at it right there. It would be a difference between 1,500 and 4,000 on 10 grand, right? So that is why it makes it worth it. Plus, if it's a stock that pays dividends, you have that coming every quarter too while you hold it. So I mean, and if you can hold it a year and a day, there is a chance. So it's impossible. I mean, everybody that I talked about the market, everyone has the same idea, which is the same idea I have, but it's easier said than done. Buy low, sell high, right? But that is very hard to chase. Everybody thinks that day trading is also simple. That is also a very difficult thing to do. I've tried my hand at these things. It's just impossible to guess what the next catalyst will be to move something in either direction. There have been times when the market was shellacked by one trader, making the wrong bet in the stock market. I forgot what it was. I want to say one of JP Morgan's guys executed an option, but it was something like over 100 million, 2 billion, something he did that made one guy, it just reverberated throughout the whole market. And you never can time that. So that's why, I don't know how to say when is the perfect time to get out, when is the perfect time to get in. So I try to just ride it out. That's why I try not to do the risky play of what you were initially asking.
Is cryptocurrency, does that follow the same rules as a stock? So if let's just say I hold Dogecoin for a year, do I get the same benefits of capital gains with crypto, or is that a completely different puppy?
You want to know something? If I can be honest with you, now I do own crypto. I have not checked if that is something I could pull up and check, but I am not sure if the capital gains tax, but I know with a lot of investments it does. And there's a good chance with crypto it does as well, but I couldn't tell you for sure that it does. I mean, I'm going to find out not so much time from now, but I'm not positive.
I mean, does cryptocurrency count as foreign exchange? I know there are like a lot of traders out there who don't even deal with stocks, futures, or options, and they just play around with Forex, they call it, right? So
yeah, foreign exchange.
Is cryptocurrency technically a Forex trade?
I don't know because it's not, okay, even though it is a currency, I'm not sure if it's considered Forex. It might be it's different. I mean, it's trading 24 hours a day, 7 days a week. It's hard to say really, because this is the thing. Even I've heard of crypto for a long time, but really I only got into the fray after, I was like, I cannot miss out on this. I can't just be one, look at it and say stocks are the only thing, right? So I did get into it to see, what I could do with it, but I couldn't tell you if it's classified as Forex. But I mean, like I said, it trades 24 hours a day, 7 days a week. So it's, your investment is moving while you're asleep.
It's crazy. It really
is.
It's a gamble, man.
And so, I mean, for me, I'm not trying to down. I know tons of people that have made a ton of money off of crypto. If I could give you a full disclaimer, I know people who, if you just listen, if someone takes $1,000 and turns it into 240 grand, he has literally killed me in percentage gain this year, right? I'm not going to be able to do that. Apple is not going to go from $140 to share. For it to even double its market cap, it'd have to go from 140 to 280 in a day. That's almost never going to happen, right? That means it goes from a $2 trillion company to a $4 trillion company. But small market cap stocks and crypto, something like Dogecoin. See, when Dogecoin goes from, let's just say 5 cents, right? Right now, I think it's around 22 cents. Let's just say 22 cents, it goes to 44 cents. That's 100% gain. And that's been done now in crypto for some time. Dogecoin went from fractions of a penny to, I think, at one point 82 cents, just exponentially, like doubling, tripling, quadrupling on a daily basis. That's something that you can't get with the stock market, really. But the same thing is said for it when it goes back down. So you hear all the success stories of everybody that made money on it. It's just hard at night. To me, it is a gamble. I mean, stock market is a gamble as well. I'm not going to lie and say that, they're the person who's taken finance course his whole life, they can only guess what's going to happen. There's two sides of the coin. You have one analyst that says the stock's going to go up, another one that says the stock's going to go down. And at the end of the day, one looks like a genius and another one doesn't. So it's like, it really is a guessing game. But crypto, it's very hard to tell. It hasn't been around forever. And when everyone finds out about something, it scares me. There's so many people who opened up brokerage accounts in the last year that I started to wonder, is crypto going to start to affect the stock market? Even
Right.
when AMC and GameStop were getting shorted, people are scrambling to sell their other assets or their other securities so they could come up with the money to cover their shorts, So it's hard to say where this is going to go.
It's harder, for a guy like you who's holding them for over a year. You have like a long-term strategy, and it seems like it's very hard. There's no sustainability with anything like crypto or even small cap stocks or anything like that. It's hard to kind of base any long-term, like, stable strategy off anything like that.
Yeah, because it's tough, because it's such a new thing, right? So if you look at it, you don't have a tangible object. Like, I understand that you can kind of say the same thing about stocks too, right? But the thing is, stocks deliver every quarter in earnings. They deliver earnings, right? They let us know what's on the books, how much revenue was up this year, earnings per share, for specific companies. Like, for example, in Apple, everyone wants to know how many iPhones they sold, how many MacBooks they sold, how many iPads they sold. But when it comes to crypto, what do you really say? Like Dogecoin, other than people running it up, how do you make your money? How does Dogecoin, like, I get it. I have looked into like how these guys make money and stuff, but it's very difficult to say that. Like you said, how am I going to go to sleep at night if most of everything I do is involved in the market? How can I go to sleep not knowing what's going to happen overnight? I mean, you guys on your last episode touched on this. Elon Musk can say something and just move crypto one way or another. In the stocks, SEC governs it a little bit better. I mean, at one point, I want to say Elon said that if Tesla hits 420, this is prior than it hitting $420 a share. I want to say he said if it hit $420 a share, he was going to sell, something like that. And you can't do that. I wouldn't say insider trading, but that is, you cannot manipulate stocks like the way, because what he does with Dogecoin, that's insane. You're literally playing with their whole net worth, and you're just saying one sentence that could change everything. Him being on SNL affected the price of Dogecoin, which is insane. So it's tough to say where it's going to go. And, for, like you said, exactly what you said, Tom, for a guy that's an investor like me, I couldn't, I couldn't sleep well at night with that.
Do you think the reason why the SEC isn't getting that involved when he makes comments about cryptocurrency is the SEC not taking cryptocurrency as a real serious thing?
I'm not even sure where the SEC stands with crypto. I don't want to tell you a lie because I'm not positive, but I know they don't have as much pull as they do with the market. So with the market, anything can be considered. There's so many things that could be considered inside, because that's kind of like a form of insider trading. Because if he's going to sell 420, that means that, everyone knows what's going to happen. The stock at that moment would drop. Like, that gives people an idea of a future price. Like, you can't do that. I think with crypto, it's just not even that it's so new, because crypto has been around, right? It's kind of been brought to the attention of a lot of people more recently, but it's hard to say exactly what rules and regulations they have over an object that is, they are not physically doing anything. There is no tangible item that is being produced, or a service or good that is being produced by crypto, right? And I've really tried to study it. And like you guys said, I'm a novice to crypto. And I've tried to figure it out, but without knowing all the chips, it's hard to say. Like, I can look at Apple and say, how many iPhones did you sell? That makes a difference to me, Amazon, what'd you do? What did your AWS, the web services, do this last quarter? That makes sense. Did you beat out Google? That makes sense. But I can't tell you how Bitcoin, other than Tesla, I was saying that they would take it for payment or whatnot. But it's very up in the air.
So I have a question kind of in relation to that. So, you talk about like with Apple, for example, you can look at their sales for a year, and you can, their stock is kind of based on something tangible. I know for a while there, the valuation of Tesla was very hotly debated because a lot of people said that Tesla for a long time wasn't actually showing profits. And people were saying that the value of the stock was solely based on sort of the enigma that was Elon Musk himself. Yeah. So as a value investor, how do you approach a stock like that?
One of the things was when I first started purchasing Amazon, they were also not reporting a profit, okay? Every quarter, they were reporting a loss. But what was happening was a lot of that was going back into advertising, marketing, whatever, R&D, right? Research and development. The thing is that the market is supposed to really trade on future potential, okay? So when they do an earnings statement, you'll notice that they usually do earnings after the close of the market. You'll notice that earnings statement could have a huge swing one way or another, but it's not always just on the numbers that they produce for the last quarter. It's on future guidance, right? Because stocks, each earnings statement is based on not the earnings of 2.5 months prior or 3 months prior of the same spot 1 year ago, because you can't compare Christmas sales against like March sales, right? That's not going to ever line up. You got to compare Christmas over Christmas. So I want to say when I first got into it, Amazon, like I said, they were not making a profit initially at all. I want to say when they were making the Kindle, it cost them $88 to make it. And then they would charge and make $1 profit off of just the Kindle, hoping that people would use the software. The thing is that his idea with, because it does seem like that is the direction that people will move in with electric cars. And, I know people that have Teslas that are extremely happy with them. It's kind of like, do you think that this is because their valuation is tough, because you're talking about a guy that comes into the market with a new car and is now, his market cap is more than a bunch of car companies put together. It's like Ford, GM, everybody. Put together is not as worth as much as Tesla. For me, if I can see that there really is something to it, it's tough for me to say that. I don't know what to think about Elon Musk. I like the fact that he's a visionary, but his company, I do see that in the future. I do think that, it's going to make waves. I do think that he's going to sell a lot of cars. And I do think that the technology, other than just the vehicle that they try to bring forth, it's a useful thing, and it's kind of a necessity, some parts of it. So I do see the value in that. That's why I would, to be honest, full disclosure, I don't own Tesla right now, but that's only because the market's so volatile with their stock price that it's been insanity. But I've always thought, I used to tell everybody we should get in on Tesla in between $200 and $300 a share. It's just that right now, I don't know where it's going to go. It's around $600, $700 a share. It's around $680, something like that. It teeters so much. And if this guy says something, everything changes. So it's tough to say when to get in, when to get in, get out. But, Tesla is a company that I do see the value in it. And honestly, that would be one of the things that if I bought Tesla, I wouldn't hold it for just a day or two. I would try to keep that for a while.
Sure. That makes sense.
Give us a little bit of the backstory to it. How did you become a professional at this? What is the background here? When did you start trading? Why? And how did you learn? Because I know a lot of people are, now that it's so easy just to trade on your smartphone, everyone thinks they can be a trader now. So I just want to know your background and how you did it to get to this point of success.
When I was 21, I had saved up like $5,000. And I think at the time I might have been working at a Ford dealership as a lot guy. Like, I was still going to school, things like that. And, it was like a side job, just getting cars in and off the lot. I finally saved up $5,000. And my father came up to me. So my father has always invested in the stock market. And he said, you should do this as well. And it was very hard for me because $5,000 at that moment in my life took so long to save. And he said to me, Joe, invest the $5,000 in the stock market. If you somehow lose it, I'll give it back to you. If you make money, then that's great for you. So that $5,000, I bought Apple right away. I mean, don't quote me on the number. I want to say Apple at the time was like $36 a share. I bought Apple. And within a short amount of time, That 5,000 went to $6,300. So I made $1,300 profit, right? It was pretty quick, especially against how me to get that 5,000. So what I did was I called my brokerage and I asked them to send me a check for $1,300. And I took that 1,300 and I put it in my savings account. And my father, who could also see my account, called me that day. He said, "Joe, did you take $1,300 out of the of your brokerage account?" I said, "Yeah, Dad." I thought he'd be proud of me. I said, "Dad, I took it. I put it in the savings account." And he called me stupid, actually. And he told me, he's like, "Joe, get the money back out and you have to reinvest it." Right. And that is when I had learned at that moment that that's what I have to do. So what I started to do was at that time I would work for a few companies. I would try to save up as much money as I can. So when I was younger, a lot of my friends bought cars that were super expensive, and I kind of stayed away from those things because I kind of wanted to see where this would go. So at that point now, this is basically the only thing I do. I mean, as soon as I wake up, it's the first thing that I check. I'm not going to say that I have to do day-to-day thing. Like I said, I don't day trade, but I look at it every day for a lot, 9:30 to 4 o'clock. I'm pretty much on it the whole time. But that is how I started it. So from that point on is when, so for 20 years now, I've been doing it.
So I want to get an understanding of this now. When you made that $1,300, and this is some time ago. I mean, Apple $36. You got a check mailed to you from your brokerage. Now that was considered a trade where you would have paid the higher tax bracket. So now not only did you take out that $1,300, you had to pay taxes on that $1,300, and then you had to reinvest it. Correct?
So here's the thing about that. When I called the brokerage, I called them. I didn't tell them to sell the security. I told them to. So right now, margin account is an account where you can borrow against the money you have, right? So if you have, let's say, $1,000, you could buy $2,000 worth of stock. You're going to pay an interest rate to them, like a bank, to borrow that money.
Okay, so let me just understand. It's got to talk to me like I'm stupid now. So margin account means that if you have 1,000, you technically can trade up to 2,000. So you can you could double it at the time.
If you have 10 grand, 20 grand, you have 20 grand. If you have 20 grand, you have 40 grand. So actually, I think there's a little bit more. I don't even think it's exactly 1-to-1. I think you could borrow a little bit more. The thing about margin is, depending on how much you borrow, they'll give you an interest rate anywhere from 9 to 2%, right? The more you borrow, the less the interest rate will be. The reason you do that is so you can buy more stock than what you can afford. Thing about margin is that if you start to go down, it's great when everything's going up and you're on margin. You're borrowing money and you're making more money than what your interest is. But if everything starts to go down, if it goes really far down, the brokerage will sell the shares and take their money. They'll never take a loss on their end. You could just lose on your end. So the difference between margins, it's important to know that. Thing about margin is margin can wipe you out. You can actually lose everything in margin. If you don't have a margin account, for example, my crypto account is not a margin. I don't trade on margin on that account. Crypto that I have, a lot of it is down, but I can just hold it till whenever. I don't have to worry about it or look at it, unless these are going to go to zero or not exist anymore. I could just ride that out. But on a margin account, it would be a problem because they will take their money first before they're going to take their money before I lose their money, and they'll allow me to lose my own money. Right. If that makes sense. Right. So when I pulled that 1,300 out from my account, I actually see now they make you, I think they tell you they'll make you take a test to see if you can qualify for a margin account. I think people get margin accounts by just clicking a box, to be honest with you. But back when I first opened that account, I used, at the time, it was TD Waterhouse. Now it's TD Ameritrade. They gave me a margin account right away. So that $1,300, I never sold the stock. I actually borrowed that $1,300 without knowing it and put it into my savings account. And I'm now paying interest on that $1,300, if that makes sense. Okay. So that's what I'm doing, actually. So I never sold the shares. I actually still had the same amount of shares of Apple at that time, but that money, I pulled it out. So, that is something even till this day, I kind of do. So, like if I need to get something taken care of, basically, I don't want to sell my shares of stock. I want to keep them. The ones I'm in are ones that I try to keep as long as I can. I would like to say most of my portfolio, at least 80 to 90%, is already in capital gains territory, right? So I don't want to have to, get rid of anything. I would prefer to try to ride it out. And if I need to do something in between, I don't mind pulling it on margin or taking a little bit of interest on it because I don't want to get rid of the security.
Okay,
Because that's my
so
way of making money, you know?
if you borrowed money, you're getting, obviously there's an interest rate attached to that. So technically the interest rate that you're borrowing the money at could technically be less than the capital gains tax that you'd be paying. So you pay back what you borrowed off profits of
Exactly.
other stocks, so to say.
Yes, exactly. So that's the thing. I mean, also the margin amount goes up and down. I mean, if your account starts going up in value, your margin actually starts to increase as well. You now have more room to purchase or to buy or to pull money for yourself. Because the money that's sitting there, it's like basically a checking account. It can just sit there, but if you're on margin, that cash part is zero, right? It's actually negative. So that's where you'd have to pay the interest rate. And like I said, like my cousin recently, I went and seen him. He went on margin for the first time recently. And that's the thing about, not to go off topic, but thing like Robinhood coming into the picture is actually, even though Robinhood is more for the novice investor, I would say, the thing is them coming to the picture was actually good for people that have been doing it a while as well, because Robinhood came in, said, hey, listen, we're going to let you trade stocks. You don't have to do any fees. I used to have to pay $20 to trade a stock per transaction,
Wow.
right? Yeah. Right now it's free. So what someone like me was able to do was able to take what Robinhood offers and say, hey, this is what I can get from an online brokerage. Why would you not match this or do something better? Which is exactly what I did. My like I said, my cousin, I mean, he's been trading for years, but he recently went on margin, which is a little bit tougher because he's got a kids and a family and whatnot. You don't want to lose everything. But when he went on margin, he called me, told me his rate was somewhere, I think it was like 8-9%. And I told him, I'm like, listen, just tell them that Robinhood, if you even look on it, it says like they have margin accounts for around 2.5%, 3%, whatever the case might be. I said, just use it against this. And he actually was able to just whittle it down to, sub 4% right away. So these other things being around, it creates competition that makes it good for us to say, hey, let me stick with this one. Let me go with that one. So that's the way that would work.
That's good. So like a Robinhood coming in does make it fairer for kind of everybody, not even just the novice investor.
Exactly. And I wouldn't even want to say the novice investor. It's just that Robinhood does a really good job of explaining things and whatnot. But if you've done it for a while, there are things that Robinhood does that you wouldn't know until you've done it for a while. For example, let's just say you buy 100 shares of company last year at $100 a share, and you buy 100 shares of that same company this year at $300 a share. Okay. Let's say you want to sell just 100 shares out of those 200. Thing with Robinhood is you can't really specify which 100 you want to sell. And why would that matter? Because they're going to be taxed differently. One is in capital gains tax already, territory already. The other one is not, and you might have lost money on that one, but you might need cash. You would prefer to sell the more recent shares than the ones that are, or it's up to you. Maybe you want to sell the ones that are capital gains tax. What I'm saying is they don't have a way for you to really specify. That's called like FIFO and LIFO, first in, first out, last in, first out. And, a lot of my buddies have made money in the market using Robinhood in the last year. But when I brought that question up to them, I noticed that no one knew the answer. And when I looked it up, it's like this incredibly insane process to kind of get that done. I think you even have to talk to someone there. And I want to say that's a very difficult thing to do with Robinhood. But for my brokerage account, and I'm not saying this makes them better, but it is something that is important. When you're executing a trade, it is asking you right then and there, which way do you want to go? Do you want to take, because I'm not buying all the shares I ever had at one time. Like I bought, shares of different companies at different times throughout my whole life. Some I might be holding for years at this point, and I might not want to get rid of it just because the tax hit might be too big, So I might want to get rid of something else just to free up some money. And it makes it difficult to specify that depending on what brokerage you use. So, that's a thing when people wouldn't even think about that actually with Robinhood. But that was when I opened the Robinhood. Disclaimer once again, the reason I opened Robinhood is you cannot purchase crypto with TD Ameritrade. As big as they are, and that's my favorite brokerage, you cannot buy crypto through TD Ameritrade. So that is why I opened a Robinhood. And then I found out you can only buy 7 cryptocurrencies through them. So then I opened up a Coinbase as well to see,
Then you can't get Doge on Coinbase.
Yeah. So
Yeah.
It's insane. I have friends that are opening accounts overseas, to purchase different cryptos that are coming out. And these are the things that's scary. I have friends that are opening foreign accounts. I mean, it's one thing, not for nothing, an American account I feel secure with that. But when you're opening accounts in other countries where we're not regulating that, you just wake up one day and everything is gone. Your account will just say zero. It'll say server does not exist. I can't take that risk. So that's why, it's tough, but a lot of people are doing a lot of things to, I wouldn't say to stay afloat, to try to make it, I guess.
So 2021 is definitely going to be an interesting tax year then, especially since you're playing around with the crypto now and not knowing whether or not, if you hold it for a year and a day or trading it under a year and a day, and the tax implications there. So that's definitely a follow-up that I'm going to talk to an accountant about, because I'm sure there have been some people who played around with that. I mean, I had a guy who didn't make 240 grand off of Dogecoin, but he took out like 20 grand. So it's less than a year. So that means he's paying 40% on 20 grand if he just waited.
He should be. Once again, though, you never know. See, that's the thing with Dogecoin. He might have made the smart play, because you don't know a year from now. That's what I'm saying. How can you sit on capital gains tax on a company that is worth just a few $100 million? The words of a person can actually sway the company's whole market cap, right, back and forth. That's tough to even hold for capital gains. That is kind of like, gambling might be the way to go when it comes to something like that.
Well, we're kind of hoping that maybe nothing really happens with Dogecoin for 3 months, and then Elon Musk sends a text. So what about that Dogecoin again?
And then boom, to the moon.
I mean, that's really interesting, the 365 plus a day rule. Now, and it doesn't matter if it goes from year to year. So like if you bought something today, 2021, you obviously have 2021 taxes, but since you still own it, have made no money, it goes into 2022. And then that's when you file for if you decide to pull the money out. So 2021 doesn't even matter at that point, even though that's when you bought it.
Let's say the guy, let's use, for example, my friend, he turned 1,000 into 240, right? He puts that 1,000 in there and he has his Dogecoin. Let's worth it's 240 grand right now. If he doesn't sell it, he doesn't have to pay taxes at all. Actually, he could even borrow against it probably if he's on margin. But he can literally just hold that asset or that security until he wants to sell it, and only when he sells it. So even if he doesn't sell it till 2024, let's say it's worth $100 million by then, he will only pay taxes on the day that he sells it.
Let me ask you about margin here for a second. Then let's say I buy a stock. Let's say I've got, I don't know, $10,000 in a stock or whatever, and then I borrow margin against it, and I don't touch the underlying asset there. I don't touch the stock. I don't sell it. I don't do anything with it. I just keep it in there, and I borrow margin against it. Do I have to report the margin as income? Like, do I have to do?
No, you don't have to do. I'm sorry, I don't mean to cut you off. You don't have to do anything unless you sell it. Okay, so I'm not saying this is a recommendation, because personally, from people that I know that invest a lot of people are scared off by margin and by options. The reason is because they can get you both to lose a lot, if not everything, right?
Sure.
And if you're heavily trading, you can't play like that. So I'm not saying these aren't great financial vehicles or tools to make money. I'm not saying that at all. It's just that it's a little bit riskier of a thing. So margin I use personally. You could borrow, let's say, Tom, that you have like $1 million and you want to go on a margin another $1 million, right? And now you are on margin for the next 10 years. All you'll be doing is paying the interest out of your account. You won't even see, every month they'll pull out whatever percentage they're giving you that money at. It'll probably be a lower rate because you're at $1 million. And you won't have to do anything. You don't have to tell anybody anything until the moment you sell. Yeah, I mean, you don't have to tell anybody anything until you sell. So that's the only time that you'll have to, write it up and say, okay, so this is where, at that point, whatever your income is. And you can actually hold it against, let's say you made $1 million off of Dogecoin, but you lost 500,000 on Apple. I mean, let's put it the other way. Let's say you made $1 million on Apple and lost 500,000 on Dogecoin. You would be paying tax on 500 grand.
Oh, wow.
Yes.
That's
so
awesome.
So you can count your other losses in the market against your gains. I just want to say you can't do the same stock within 30 days. I want to say it's called a wash sale. So there are ways, because there are people that could just sell it and buy it the next day. And then, they'll say, oh, I bought it at a loss, and then sell it at a gain and say, it's a wash. But that's not going to work like that. They have actually rules to make sure people don't beat the system.
So I guess I made a mistake then in my podcast last week, or our podcast last week, when we said something about the $3,000 rule.
I heard the $3,000 rule is right. It's just that you can count securities against each other, right? So if you have a loss in one, so it's at the end, it's the net profit is what the profit is what you're going to pay the income tax on, right? So like I said, if you made $1 million on one, but you lost, if you made $1 million on one and you lost 1.1 million on another, that's when you can only claim $3,000 a year in losses. So, which is insane because they're going to tax you to the moon on anything else. But even if whether you lose $3,000, Tom, and then let's say I lost $5,000, and let's say Chris lost $200,000, we're all going to be able to count $3,000 going forward. So. Yeah, so it's a funny rule, but yeah, 3,000 this year, and then if you're still negative, you can count another 3,000 next year. If you never trade again, you could count 3,000 every year until you run that deficit out. If that makes sense.
Okay.
I think I get that. So let's just say I have a W-2 job. I'm making $100,000 a year. Then I have a investment portfolio where I lost $100,000. So I can't obviously avoid paying taxes on my whole income of $100,000. However, I can show a $3,000 loss, and then really I'm only paying income on $97,000. Does that sound about right?
Yeah. Yes. So that sounds so. I want to say most of my tax things that I figure are on just the market side. On the market side, that is correct. So like it'll always be 3,000. Now you can carry it forward. If you lost like $100,000, let's say this year, you're going to do 3. You could do 3 again. Basically, hypothetically, for the next 33 years, you could call $3,000 loss every year. You know what I mean? Until that $100,000 is now covered, if that makes sense.
So this whole stock rule is kind of like the gambling rule, where you can make $1 million and have 500 in losses. You pay $500,000 on the gambling, but you obviously can't. So actually, you can show no gambling losses if. Let's just say you make $1 million, but you lost 1.1 million. You can't claim any gambling losses to offset your income. So investing in stock has a benefit of $3,000 if you're a loser.
Yeah, I mean, it does have that, but it's an unfair thing because if you make $1 billion, they're going to make sure they get every cent of that from you.
Of course,
what can you do? Of course,
the government will always get their money.
Always,
yeah. Uncle Sam always gets his cut.
Yeah. There's no better mob than that one.
So you recommend TD Ameritrade? Do you recommend that to new traders, or do you think TD Ameritrade is for someone that kind of knows what they're doing?
I want to tell you something. I did take business finance classes in school, right? And really, I am not much more there's a friend of mine that if you talk to him, you'll see he's been going to Penn State for the last few years doing finance, right? He knows the name of every single thing. He knows all these different strategies, something like that. So even myself, if I had to say the thing that I have that just doesn't make me a novice is not this huge amount of intellect or knowledge. It's really experience, I think, because I don't have that knee-jerk problem anymore. Whereas a lot of people, I can see that. I can see people stressing out. Because, you have people who just started losing 10, 20 grand in a day. And they're like, oh, my God, Joe. I know a guy who personally borrowed like 150 grand from his mother. And he put 150 grand himself. They started doing this because they saw the hoopla with all the cryptocurrency and everything. They started losing right away. It's like, people will lose their mind from doing this, right? So it's not that I think TD Ameritrade. I personally do like TD Ameritrade, and I've used a couple other ones. They've always been good to me. I'm on a higher client tier with them, so they do. There's like little things that matter to me. If I need money, they'll overnight it right away. There are things that they'll do for me a little bit different than other people. So for me, but I would think for someone, if they were going to choose a place, I think like some of the most important things are like if you're going to go on margin, what kind of rate are they going to give you? Is there a per transaction fee? Because if you're just starting out, first you want to build your trust into the market, right? I've had friends that started out with as little as $25 in a TD Ameritrade account, just trying to see how it works, And honestly, if you could turn $25 into $50, you're a genius because you just made 100% on your money. If you could just beat Uncle Sam, if you could just beat, not Uncle Sam, I'm sorry. If you could just beat the rate the bank's giving you of putting your money in the savings account, you are now doing better than, you know what I mean? I think the savings account interest rate's like around 1%. So if you just beat that, you'd be good to go to. So I couldn't tell you what brokerage. I just know that if I had to say Robinhood versus TD Ameritrade, there's no doubt in my mind that TD Ameritrade. I could tell you many reasons that I think is better, but for me, I definitely suggest TD Ameritrade. They've always been good to me. It's a big brand. It's a known, attached to a bank. I like everything about them.
So what's your advice then to, and again, this isn't financial advice, but for somebody that's new, they're listening to this podcast, they opened up a Robinhood account this year. Pretend it's me, for instance. Like I put 10,000 in Robinhood this year, and honestly, I don't know what the hell I'm doing. I bought a couple of stocks. I invested in cryptocurrency. I was up 10 grand at one point. Like I said in the other episode, now I'm only up 1,000. I mean, I saw being up, I saw going down. It sucks. I'm thinking to myself, oh, I lost out thinking that it's continued to grow. Now I'm thinking to myself, Robinhood, they have a lot of negative stuff going on in the news with when it's coming to those AMC trades and the, what's the other one? GameStop trades. So I was thinking about possibly moving my regular stocks to a TD Ameritrade. Now, for someone who is a novice like me, and I'm not going to go on margin. I feel margin is one of those things where you kind of have to have a little bit of an idea of what you're doing, or you end up with a problem. To me, it's like a bookie. Going on margin is borrowing money from a bookie, and if I don't pay it back, I'm going to get kneecapped. Except it's the brokerage, and I can't call the cops on them.
Yes,
so
you can't.
It's basically that's what it is. So I probably wouldn't go on margin. So for someone who's going to really try to test the waters with going long, because until you said it, I never heard before 365 and a day, because I thought anytime I buy a stock and I sell it, I'm paying 40%. So now this capital gains thing, I learned a lot just now, just talking to you. It's just like, well, I'm going to hold everything now for at least a year, unless I know it's going to tank. But I'm the last person that knows something's going to tank. I don't work for the company. I don't do this as a job. Like, it's not I'm not a full-time investor.
That's the main thing. Yeah.
Right. So is TD Ameritrade what, like, if somebody's listening, it's just like, oh, you know what, I'm going to do something, or, I really don't like Robinhood. Is TD Ameritrade like the platform that people should use if they're kind of new to this?
Absolutely, because initially Robinhood had everyone beat by doing the zero commission trades. That means you could buy and sell a stock. Think about it. I would have to pay $20 every time I bought and sold something. So now I've heard conversations where someone's like, I made $180 today, right? And that's because they bought and sold a stock or a crypto like 6-7 times. Now they made 180. If this was years ago, they would have had to pay like $140 in fees to make that. Right. So they would have came out $40 on top. So that was the initial thing that Robinhood had to draw people. And I will give Robinhood this. They give good descriptions on helping people understand options. They have it very well explained and whatnot. But I would definitely say if investing is going to be your thing, Robinhood has things that they need to catch up on. And even if you're not a person is not a novice, an investor would not be understanding yet of what it is what some of the things mean. Eventually, if they stick with the game, they are going to learn those things. And they're going to say, oh, this is the reason why I should have stuck with it. So I would point anyone to go into TD Ameritrade first, really, as long as, they're not charging you fees to get in, or, it should be minimal, if next to nothing. Like I said, they have to now compete with Robinhood's business. So because of that is why, I don't think I pay anything anymore for TD Ameritrade. Before I used, like I said, up to $20. I remember when they dropped it down to $9, it was a big deal. Now it's $0. So yes, I would definitely say that if you had to choose one, you should choose one of the bigger ones, and TD Ameritrade, definitely I would give a recommendation to. But that doesn't mean like another large one, Charles Schwab. I think Charles Schwab might even own. They just bought a couple people. It might even be TD. I'm not even positive. But they're one of the larger ones is always good. But Robinhood, like I said, it is for the first-time investor, but they do a pretty good job of explaining everything. So if you've never been in the stock market, I could see why someone would go to that. But if you are going to stick with it, you would surely move your money from that account in the future, for sure.
Going back to your first $5,000, you made $1,300. Technically, it was borrowed at margin, so you never technically made $1,300. But anywho,
yeah,
what sparked you to say, I'm actually pretty good at this, and I'm going to leave my job and do this full time? I mean, was this like the thing? Like, did you ever have like another job, or did you
Yes.
just take the step? Okay. So tell me, like, let's get to the path of where you're at now.
I started doing inside sales for software companies, right? And then from that, so I was basically always on the phone doing some type of, even if it was like when I used to work for Bank of America, I basically did retention, which is just a nicer way of saying collections, right? But this is basically also a sales job. So I used to do everything on the phone. And that was something that I was able to excel on. I was always able to get in touch with my clients, meaning like, on a personal level where I could get everyone to do whatever it was that I needed to do to achieve whatever goals I needed. I actually worked full time for till the age of 33 when Bank of America was doing layoffs. I was working for them at the time. They started doing layoffs. I want to say that's the year they were like trying to cut like 30,000 people. This is after acquiring Countrywide and all this other garbage that they had on the books. So they had to get rid of a lot, right? So when they did that is when I didn't know initially that I was just going to stick to. So initially I just started to travel after that as well. But then I started to do this. And the thing is, if I could be honest with you fellas, I at least twice in my life have lost everything doing this. Now, not from like drinking or drugs or anything like that, meaning financially, I would get scared. I've had times where, I've had friends, I don't want to say the wrong thing, but I have friends that are producers on some of the CNBC shows. I'd call them and say, hey, listen, can you ask such and such on TV? What should I do right now? And that knee-jerk reaction came, and I would start purchasing things high, selling it for less than I bought it, thinking that, let me wait it out and I'll get in again and buy it lower. And I would just lose everything. So what happened is that basically over time, really, I developed like a strong stomach for that, So now when we go to war, meaning like war is bad for the market, a lot of things are bad for the market. If any real bad news happens, the market starts to tank. It's just like that. I started to really realize to weather that. And, over time, like I said, I just try to acquire as many good stocks as I can as possible. I don't plan on not living, I plan on living a lot longer. So, I'm just trying to make, just trying to acquire as much as I can. And so I would say 33. And then, now I'm a realtor as well. But still, definitely the primary form of income for me is the stock market. So it's the tried and true thing for me, So even when I tell other people, I just say, that's why, like I said, like my perfect example is Bitcoin initially came out. Like I remember one time, maybe the last couple of years, it went up to like 20 grand. And I remember on Instagram, I don't know if you guys ever heard of WorldStar, but WorldStar made a post about Bitcoin. And literally at that moment, I knew. I was like, this is going to crash because everyone knew about it. So what's going to happen? Everyone starts putting their hard-earned money into this. The thing crashes down to 4 grand. I think Reddit had to put a suicide hotline number out there for people because, people lost everything. There's so many people that have so much knowledge, like Tom with the options. You can check the option chain. Like, I know people that do a leap, which is a year out options, right? Which you could just trade at some point. There's so many different ways to do it. It's just for me, this is the way that's worked, and I just do not get scared. And also I try not to invest in companies that are not like that. I don't, if it's a company that's not good, it's a small market cap, it's not going to be around. I don't buy any penny stocks. I don't buy stocks from anybody that has zero knowledge about it. I never take that advice. But sometimes I will listen to, like, you can catch a good idea from, like, for example, not saying this is a stock I invested in, but I think there's a store called Elf Eyes, Lips, Face, I think it's called. I would never know about that, right? But, one of my coworkers, she's a woman, she brings that to my attention. I know nothing about makeup or any of that, right? But because of that is what made me start looking into other things that I would never know about. So it's not bad to like pay attention to even to your close surroundings and see what other people are talking about. At one point, GoPro was huge. Like every single person had a GoPro camera. The stock was like blowing up. What else was there? Snapchat at one point. But the thing is, these fads come and go. And a lot of the people who put money into them have lost. And there's going to be people that might hear this and say, hey, I've actually made a ton of money off it. But there is someone on the other side of that as well. And you don't hear those stories really.
Yeah, I know a lot of people who lost out on IPOs, like when Snapchat first went public, and it was first valued at like $38, and then then it immediately started tanking as soon as it went public, and then a bunch of people panic sold, and yeah, they just end up losing money on the whole thing. And eventually it stables out, but it's not necessarily going to stable out at the price that you paid when it was first initially offered, because it's red hot at that point. So yeah, I know a lot of people who got scared off with stuff like that too.
Yeah, like there are a lot of people, like you said, IPO. There's a lot of people that think that, hey, listen, let me get on this if this is like the next Apple or something. You see all the time. If you just go to like Yahoo Finance, on the bottom there will be all of these advertisements saying, hey, if you put $1,000 in this stock such and such years ago, this is where it would be at. So here's the next one, right? But it's hard to tell who's it going to be. Like, it's impossible. Listen, I wasn't even that really sold on Amazon stock when I first started buying it. I wasn't 100% sure. I'm not really 100% sure anything. I am pretty confident in Apple, I'll be honest with you. I wasn't sure because these guys weren't reporting a profit. I didn't even know which way to go with these things, So at one point, now it's different, because how do you tell someone now to start buying shares of Amazon at 3,700, even though they say that's a value still? They're saying that's a stock that's 5,000, maybe 4,000 minimum. But how do you tell someone to put that much money into it? So, it's all about finding the next one. I mean, I'm sitting here too, trying to find out what the next stock will be. For a little bit, I did think it was going to be Tesla, but it's hard to say.
Do you think Amazon splits so that stock price could be cheaper? I mean, what can you talk about splitting stocks so that the offering is cheaper?
So split, other than that, just so if you had one share of Amazon at 3,700, I'm just saying this if someone's listening and they don't understand. If it splits 10-1, that means you now have 10 shares of Amazon at $370 a share. The thing is that some people believe that splitting the stock is not made for investors, okay? If you split the stock, you will now have all your people that just bought Robinhood last year flooding to Amazon, because for some reason, just from mentally, they happen to think that made a big difference. Now, in some ways it does. I think Amazon would pop because if it's split, right? But there are companies, so Warren Buffett's company, Berkshire Hathaway, I don't want to say the wrong number. I think one share of Berkshire Hathaway, the Class A shares, it's like 330 grand or something like that for one share. Obviously, he could have split it. He doesn't care about that. He doesn't want to. I would have also told you that Amazon at this point doesn't need money. So I would have thought that it would have been tough for them to split for now. But the thing is that per yesterday, Jeff Bezos is not the CEO of Amazon anymore, right? So the new guy, I think his name is Andy Jassy, that stepped in. There is a chance that he'll split the stock. Bezos, I think Amazon split like 2-3 times before, but the thing is, every time they split, they needed money. Amazon is not in that position anymore. They're one of the world's top companies. I think market cap's like around 1.8 trillion. So they're not in need of money anymore. But I do think that to attract a different type of investor, there's a chance that they might split it. And I don't think it would have happened under Bezos' leadership. If anything, I think this new guy that came in, and if you look at the market reacted really well to him coming in. Last 3 days, I think Amazon went up like 160 yesterday. Today up 20, which usually would have been a sell day after that big of a run up. And I want to say on Friday it went up 78 points. So they kind of like the new guy coming in, and I can't be sure of this, but there's a good chance that people feel like if there was ever the option of splitting a stock for Amazon and like at the point where they don't need money now, this might be the guy who ends up doing it.
For someone that's looking to buy long, okay, and have a more longer term investment, do you recommend stops if the stock hits a certain low value?
The thing is that it can blow right through a stop loss. So people think that it'll sell right there, but you can put a stop loss in for overnight and you'll wake up tomorrow, it blew right through it. So there's another thing about this. A stop loss can just be activated on a crazy day. So Tom had talked about this on the last episode in regards to basically computer trading, like the algorithm, it just spikes, okay? So something will trigger that to go a certain way. And what'll happen is a stock could temporarily, I've seen Amazon right before blowout earnings be up all day. At 4 o'clock, it goes down 100 points. All right. For literally like just a few seconds. That's going to activate all these stop losses. Right. And you know what happens? Big boys come in, the guys with the real money. Right. They come in and they start buying your shares on the cheap that you sold on the stop loss, because it just, like, because of a computer blip, it literally went down 100 points in 1 second. You won't even see it go down 100. You'll just know because it'll show the low of just what occurred. If you look at the chart, you'll see a spike down. That'll trigger the sell. Now you don't have it. Someone else will buy your shares on the cheap, and then they reported awesome earnings and the stock went super high. So that guy probably lost out on like probably 200, 300 points potentially. You know what I mean? So it's tough to say because you never know. I mean, I know the reason that people do them is to feel a little bit better about your investment, but I don't do them at all. I don't have any stops built into mine.
So what you just said, where people, the big guys come in and buy that stock, and I forgot what movie it was. It just triggered a memory where certain people who had a lot more money, and remind me of the movie if you know what it is that brought it up, where they have like 3 seconds or like seeing the market earlier than like people like me, so that they're able to make those moves before I can make the move, right?
There are, I know I've read this. There are companies that move closer to the exchange in New York, to Wall Street, because there is like, it's not even a second. It's like the thinnest amount of time that you get it ahead of someone else. And that makes it different because these computers are trading on algorithms. It can't be a regular guy like me and you, us three sitting there saying, hey, enter, execute. Like, we're not even going to get it done like that, right? But the computers are like programmed to do it a certain way. So, I mean, they can even just trade large amounts of stocks and just make a half a penny per share on it and sell for profit, buy again, sell for profit, buy again. So there are different things. They definitely have it where I've definitely read that people can move closer to Wall Street so you can get it a little bit, but that wouldn't be an investor once again. You know what I mean?
Yeah, right.
That'd be like a whale.
That's not an investor,
It was Boomerang. It was the book. It was surprisingly, Tom, you're going to laugh. I actually read a book. I read a book called Boomerang with Michael Lewis. By Michael Lewis, one who wrote The Big Short. Boomerang, I think, was about like how bigger brokerages, they had an extra 3 seconds or something to where they were able to buy and sell quicker than people, like everyday people.
Yeah, listen, let me tell you, this is not written for us to kill it, okay? It is written for like the big boys to make it. Not only that, like, even, you know how Tom was talking about IPOs before? When an IPO comes out, like a company like Morgan Stanley will be the underwriter on that, and they get the shares. They know what it's going to come out at, and they get to purchase the shares significantly less than that, which makes no sense. Like, you know what I mean? It's going to come, just like he said, like Snapchat IPO'd around whatever, what'd you say, like $30 a share, whatever it was. Like, there are people who were able, whoever did the underwriting on it, they were probably able to buy it at like $15-10 a share. It's actually insane. Even and like Tom had talked about this on the last episode as well. It's the whales. These guys know it's called shaking the weak hands. Like, even off of this knee-jerk reaction stuff, they'll get people out to sell their shares. The regular Joe Schmo, like us, right? And then these guys with wide swaths of money will come in and just buy everything up. Like, they have it down better. I mean, I couldn't imagine that there isn't a scenario where guys that work at different firms, Goldman, JP Morgan, in the same departments, go have lunch together. I wouldn't be surprised at all if they're like, hey, listen, around this time, let's do this. Because these guys are controlling a ton of the market.
Yeah, it's like what Tom said this week. Yeah,
right.
with the politicians before COVID, these people,
the 4 senators that he was talking about.
Yeah, they get together and they, because like you said, they have so much money in the market, they have so much pull that they can make these things like these flash crashes. They can make them happen. They can sort of artificially create like a panic where everything sells off because all the computers react to each other in like a feedback loop really fast, and then that. Yeah, so then that absolutely would shake off the average, investor, like, like the schmuck like me who's just got, a couple grand in the market, and all of a sudden I see it going down, and then God forbid I got stop losses, then it's all gone.
Yeah.
and then these guys can just turn around and buy it back. And it's like they make their own waves, and then they calm the water.
It's insane, actually. They say there's so many sayings for the market. They're like, sell in May, go away, right? Because they're saying that traders will take off kind of for the summer, right? They say there are things around lunchtime. It's insane. All these things that matter. People will come out with a report. So one thing that I always dealt with, just like talking about how the big boys influence it, So Apple doesn't get all of its components from like one person, okay? Because then you would be able to guess how many iPhones they sell if they only had one partner for everything. They get it, they source it from everywhere, right? But if one of those supply chains says, "Hey, listen, we're having a problem in our factory," that probably won't disrupt a single thing for Apple. But what will happen is, just like you see with the news today, they'll make a mountain out of a molehill. And then all of a sudden, it'll make regular guys like us say, "Oh man, there must be a problem in their supply chain. Let me sell these shares." Whereas I'm thinking that there are guys sitting there with this smug look on their face, and they're like, "Yup, yup, yup," just waiting, watch it go down. They're like, "All right, let's load this up." Just like coming to America
Yep.
on the, you know what I mean? It's insane. It is. But
Well, Joe, that's why I gamble. I don't invest in the stock market. I call it
technically
sports
all three of us
investing.
get. I just heard. I heard the. There was a good one you had said. I'm like, man, I wish I had done this before. You had. I think if they make the conference finals, right, the Suns.
I have the Suns. To me, that's
Yes.
like buying a future, like buying a stock and holding it long term. I had the Suns,
Yes.
and I already have a return. I have a pretty half decent return, which is great. I actually hedged my bet,
Yeah,
so
that
now
is
I'm
what you
guaranteed
did.
money.
And that it's all aspect. There are people, and like I know we also do real estate as well. There's so many people that are real estate investors. Their wealth of knowledge is like there's so many people that have their different things. You know what I mean? So you can't hate on, like, I don't look at someone who's gambling and say, hey, that's not the right thing, because people there are people who are millionaires from literally playing Texas Hold'em.
Yeah, and now the
Oh, yeah.
sports investing is normalized. I mean, it's not really frowned upon like it was like 7 years ago. When you tell someone, "Oh, I'm gambling on the football game," it's like, "Oh, wow, okay." Like, who's your bookie? Now it's not like that anymore. It's just everyone's sports
Everybody
investing
does it.
now.
Technically fantasy football, fantasy, which a lot of that's basically gambling. So there's literally so many different ways of getting it done.
Fantasy sports to me is like gambling, like Dungeons and Dragons. It's like the same thing. You got like all your characters, all the different stats and everything, and
it's all addicting.
Rogo the Warlock is going to come up big this summer.
Off my guesstimates for game one, broken leg.
Yeah.
So stop losses are a no for the long term. It's more or less you do a stop loss for like just like a day trader kind of thing, you would say.
I guess. See, I don't use them. So that's the thing. I don't want to say it where I'm saying it's wrong, right? Like I said, it's not that I just do it for my own living. It's not like but the thing is that I don't do them because I don't want my stock to sell. I'm not holding anything that I want to go at a specific number. You know what I mean? Now, a smart guy will have a specific number set to the side. You know what I mean? There will be a guy that'll say, hey, listen, if I make another 10% on this stock, I'm going to get out. And that's actually a smart person, because that's the worst thing. If there's one thing that is really hard to master, and no one I know has this down, is when to get out is very tough, because you see yourself making money. You're like, oh, when does it stop? You just went through it. You saw your crypto account go up to 10 grand. That probably was like the easiest 10 grand you ever made at that moment. Like,
yeah,
just went up. You're like, just wake up brushing your teeth and you're like, oh, look at that. The thing is getting out, because then believe me, I know the feeling. You're sitting there and you're like, you know what? 10 grand's going to like 20, 30, 40, 100. When does it stop? But to get out is the tough part. Me too. I mean, I bought Dogecoin at 5 cents for the hell of it, and it was at 82 cents. Now it's at 22 cents. I even bought more around 30 something cents just for the hell of it, and it's no longer as easy as I thought it was. You know what I mean? But it is there. I do think that doing something with your money is so important, whether it's gambling or anything. There's no point in putting it in the bank. It's like putting it under your mattress.
Yeah, I mean, I'm not telling anyone just bet it on a football game and not investing in the stock market. It's just, the stock market's just as manipulated as a football game.
Absolutely.
So.
Yeah, and I'm not saying even that's a bad idea, what you said. Like, it is true. I'm not saying that the stock market, because it is very manipulated. Stock market's supposed to trade on fundamentals, and that is not truly what happens all the time. And sometimes emotions just come in, and that just leads to, everything going. I mean, you got to remember, there's people that are looking at it both ways, because I look at stocks going down, I stress out. There are people who short stocks that make money off of that. I got a guy who really is got a pretty tried and true method of what he does with GoPro. He literally shorts GoPro at certain times, and he knows when to do it. He's been watching it, like just like when you there are probably little anomalies that in sports that you see, and you're like, you probably know some things that other people don't know, right? It's like that. Some people just have paid attention to something long enough that they're like, this is the wave, this is the way that it will go. So there's so many different ways about it.
That's true. There are some people who trade specific, because I've seen it, I've seen it online. I've seen it on like Wall Street Bets, among other places, but I've also seen it in like actual reputable places where people really talk, usually they talk like fundamentals and stuff like that. But there are plenty of people out there who trade strictly on the patterns that they see. They just trade on the pattern of where the line is going and where, what it's doing now versus what it did the last time it hit this number, and stuff like that, like and the formation that it makes, the cup and handle,
head and shoulders,
and all this other stuff.
What the graph is doing, the time of year. I got a guy that tells me he calls me at like 2:00. Oh, you got to get this. You got to get this. He's so sure too. He's,
That's always a good sign. When someone calls you up like they're totally frenzied.
I can hear him itching in the background,
Yeah. Come on, man. You just got
you got to do this right now. Pull the trigger.
You got to bet Buttercup. Buttercup is definitely going to win the race. Definitely going to win.
That's hilarious.
Well, that's right. It's always funny too when you see like on Wall Street Bets when people are playing options, for example, and they'll be sitting on 30 Tesla calls or something that are just absolutely, they're at like some bizarre, ridiculously high number, and they'll be like, yeah, so anyway, guys, I think this is a really good investment. I think you guys should buy these. And it's like, yeah, why would you be saying that? You don't happen to be sitting on a whole bunch of them trying to get rid of them, do you? Like, no, that could be it.
God, get it all of it. Yeah. For me, one thing that my father taught me this the first day I started training, and I literally stick with this. And I tell all my other friends that I teach trade, so a lot of them are kids that I grew up with, right? So they're like my brothers, so I could say whatever I want to. But like when it comes to, when I go out, like if I see people at networking events, whatever it is, like I don't mind talking about the stock market, but I never tell someone what to buy. Like I'll say what I buy, right? But the reason is that person, the moment they lose money, will literally blame you for that. So I never say, because even a good company like Amazon's 3,700 today, there is such a good chance that this will be less than that by tomorrow or next week. Like it could just be like that. Like someone could hear this say, hey, what a good investment Amazon, and lose money, because it can happen. The first time I lost everything in the market, it was Apple was like $700 a share. They were about to have like the iPhone 5 drop. It was supposed to be like revolutionary. And 52 out of the 53 analysts that mattered on Wall Street had recommended Apple as a buy. And believe it or not, from that moment, Apple stock tanked from $700 a share, I want to say, to definitely under $350, so more than half. And it was amazing. That was like another lesson I learned. I was like, you can't go by what these guys say on TV. You just can't. Because half are going to be right, half are going to be wrong. Like I hate to say this, I like Jim Cramer, right? My friend used to work for him. But if you notice, he says, I've heard him say two different things about Amazon in like the same 2 weeks,
Oh, yeah.
So, one day he was like, oh, Best Buy. And he's like, oh, man, we got to get rid of it. So, it's tough to figure out, that's why I think if it's a good company and sticking with it, that's like the long-term way to go. But that's just me.
Yeah, it's like you're playing roulette with all of your friends and it hits red 3 times or 4 times. And you're like, guys, listen, it's a guarantee it's going to hit black. Everyone bets on black. It hits black. And then you're like, it's going to hit black 2 more times. It does. And it's just like, well, now it's finally going to hit red. Go all in on black. And it hits red.
Yes, exactly.
Yep. You're right until you're wrong. And then, that one time you're wrong could be the end all be all. And there's that one time where you're right, and it's the end all be all. You never know. It's all a mystery.
Yeah, it is. Like you said, literally, all 3 of us in our different aspects are all gambling.
Sure.
It is absolutely true. So that's the thing. It's just like kind of trying to find the percentage that works for you or whatever it is that something about. Why not?
Yeah, someone could, $3,700 Amazon. It could be the all-time high for 20 years. And we're all
Yes.
going to say, no, it's not going to be. It's obviously going to go up, but it could very well be its all-time high for the next 20 years. So people
Definitely.
buying it now at $3,700, they may have put all of their savings into Amazon at $3,700 and they
margin,
lose.
and they lose everything. That's exactly what will happen. That's absolutely true. I mean, for Amazon, I'll tell you right now, let's just say this guy Bezos and his brother, their spaceship crashes into like a space station. It's a wrap for Amazon, regardless if he's the CEO or not. It's going to tank, no doubt. Yeah,
Yep.
no doubt. It will tank. There is no doubt. No one's even got to wonder. It doesn't matter if he had retired and quit every part of Amazon. If he died, it'll just be a knee-jerk reaction. It'll send ripples, and the stock will just crash.
The only thing, if that does happen, then I'm glad he's with his brother and not 10 Playboy models.
Yes, we're all glad.
We are on the same page.
Well, he could hold his brother on the way down, I guess.
I remember one of the funniest things that I saw happen in the market. It was funny for me from my perspective because I blindly walked into something. I had no idea what I was doing and ended up making money on it. And I thought, that led me to believe that I thought I knew what I was doing when I really didn't. But I remember when I first started shorting, or when I first started doing options and stuff, and I had a put. This was back in like 2016, I want to say, around then. I had a put, which is when you're hoping it goes down, you make money when it goes down. I did a put on Caterpillar, and I remember at the Caterpillar, the machinery company, which the average the average person who invests would tell you that's an absolutely like asinine decision, because Caterpillar is like a standard of like the manufacturing sector, right?
Yeah,
and a lot of people even use it as like the barometer of like how manufacturing is doing and everything. Like it's like the IBM of manufacturing. And I put a put on it because I didn't know what the hell I was doing. I was like, yeah, you know what? I hate Caterpillar, like, and then they randomly got audited, and I made so much money on it and I had no idea what I was doing. And then it turned out the audit was like, during that whole time, everybody's panic selling Caterpillar because, oh my God, they're getting audited. And then it turned out the audit was fine and there was nothing wrong with them. And they were like, oh yeah, there we go. Well, that's what happens. Companies get audited. And I sold before it all went south, but I was like, ooh, look at that. Yeah. This is easy. And then like, that was the beginning of the end. As soon as I thought that option trading was easy.
Can I tell you, Tom, it's not even my buddy, has gone to school for finance for so long. Okay. He went to college again. He's my age. He went to college again because he wanted to learn finance. Right. Mm-hmm. And the thing is, options were literally, he started killing it. And I can just imagine what it's like, because it took me so long to like grow it. You know what I mean? If you take like $5,000 and turn it to 50 all of a sudden, right? Which is possible,
Oh yeah.
It's easy. It's definitely possible. Well, options, you can make a ton of money off of a little bit of money. So I see the allure of why people do it. But if things are going in the wrong direction, the closer you get to it, like this guy, he killed it on his first few trades in options. And I kept telling him, I was like, be careful though. There's nothing wrong, because if you play it right, you can make a ton of money, But sure. he felt overconfident in that, and he started putting all his eggs into one basket. Boom, market went in the opposite direction. The closer you get to the expiration date. So, Chris, every time there's an option, there's a strike date, right? And that's like the date that the actual option will take place. I forgot the word that I'm looking for, but right. It will actually take place that day. It will execute that day. The closer you get to that day, so people will trade a year out, 2 years out. You could go to Robinhood or Td Ameritrade. I'll show you could do options for years out. But as you get closer to that date, if it's not going the way you want, it's probably going to stay in that direction, because the stock's not going to be super volatile the closer you get to the expiration date. So the premium that you're trying to get paid is whittled down to not, you're not going to make anything. The contract is not worth more. If anything, it could be worth nothing. And that's like exactly what happened to a few friends. Yeah, I heard you say that last time. In a way, it kind of is. You're betting on all these events to happen in the future, and you never know what's going to happen. Like I said, people don't think of it now, but that's why like I never rest easy in the market because I've seen like I said, BlackBerry, Nokia. I mean, it been a little bit older than me trading in the market, but not even that. What is this? Lehman Brothers failed, right?
Can you put an
Uh,
options trade out like a note, like the capital gains thing where it's only 15%? Like, can you have a trade that goes over a year and a day, or it doesn't really
I
work
don't
like
think
that with options?
I don't think it works like that because you're actually. I don't think it works like that because I'm not sure if you actually technically own the asset. You own the contract, so that's tough to say. I couldn't tell you. I don't want to tell you the wrong
Gotcha.
answer on that
All
one.
right, that's good. That's yeah. Options are super risky, but the reward is it's like making a whole pitcher of lemonade with one lemon, but you have to have the right lemon.
Yeah, I mean, it's not. There are people that I like. I got to tell you, it's like even today, I'm having a conversation with a guy. He's up on options. These are the numbers. He's up 78%, 80 something percent, 40, and another 40 something percent. This is a guy that 2-3 months ago was deep in the loss side. It was worth nothing. But there was no point of getting rid of it at that point. He'll get next to nothing back, but he stuck it out. So that's the thing. It was a longer contract, so it did end up working out for him. So that's the thing. To me, it's risky. I know you can lose everything, but I don't want to dissuade anybody from doing it because I've seen people, use different vehicles to just kill it in this. I've seen people kill with options. The only thing is options and being on margin does mean you can literally lose everything. That's the
Oh yeah.
difference. That's where
That,
the problem, it'll be end of trading right there, off
that's what
McDonald's.
happened in 2018 to that James Cordier guy. He had that brokerage that was optionsellers.com. He was basically shorting things on he was doing some kind of like play with utilities and like oil and stuff like that, and I think he was shorting on margin. And long story short, what happened was that market kind of tanked overnight one day, and there was a bunch of factors that went into it, but basically a rogue wave came that he didn't see coming, and he couldn't get out fast enough, and he went from he had I want to say like 300 clients or 400 clients or something like that who all had a couple million in them. They're fairly well off people, and then they all of a sudden started getting bills from the brokerage saying that they were getting margin called from the brokerage, basically saying like, hey, you owe us like $300,000 now. And so can you imagine you've got like 5 million in with this guy and you think everything's fine, and all of a sudden you're getting a notice saying not only do you not have that 5 million anymore, but you owe
us.
You owe us on top of that.
Tom, you might know the story. Chris, you might know the story. Within the last year, there's a kid who had a Robinhood account, and he woke up one day, and I think he owed them like 700 grand or something, and he killed himself actually.
Yep.
Because he was starting with some super minimal amount of money too, but somehow I don't remember exactly what he did, but he did something where he just owed this ridiculous amount of money. So I mean, that's why, especially when I talk to a lot of my friends at this point, a lot of my friends have kids, families, mortgages, things like that. It's not as easy to just play around, so it's not easy to say, hey, go on a margin account, do this. That's why I always tell my buddies, don't do those things, because I want them to make it in the long run. If you just wait it out, sometimes in a good company, even if sometimes they're bad, eventually it should be okay, but it's a lot to stomach because people aren't used to see like, Chris, your gambling account can go wherever. It can go up and down. You're used to that. Tom, you're used to that on your brokerage account. But there are people who have had savings accounts for like the last 20 years, right? Let's say they saved up 10 grand, 20 grand, whatever. If they put that in the market and then, nothing is guaranteed to go up. Or let's say it even goes up for a little bit. And they're like, oh my God, best decision ever. But then when the market takes a downturn, someone is not used to seeing their $20,000 that they've worked so hard for going down to 15,000, going down to 10,000. This now causes immense stress. You know what I mean? You don't know if something's happening to you. Like, once again, I'm going to reference like if this guy, Jordan Belfort, you don't know if someone is doing something that is just, if you're not sure of what's happening at that moment. All you know is everything that you worked so hard for is just going away in a matter of seconds. So that's why, like, I try to tell people to be careful about it, though.
Sure. Yeah, with anything like options or gambling, that's the kind of stuff where the real solid advice is just don't put anything in there that you can't afford to totally lose, because
Exactly, because you're gambling.
that's what'll
Definitely,
happen. Exactly. Yeah. So, and the good thing about, as long as you're not doing options on margin, or, as long as you're not borrowing from your bookie to gamble, like, the worst that happens is it goes to zero, and then that's
exactly.
it. You just got nothing out of it. And then, then you can argue, then you can do like what I do after I lose money on an options trade. I'm like, well, maybe I paid for the experience because it was fun.
That's what please believe me, dude. I have a lot of losers too, as well. You know what I mean? There's a ton of times I was like, oh, that definitely didn't work out how I thought it was going to,
Yeah.
I remember.
I mean, I've had some success too. I don't want to make it seem like anything I bet on is a loser, because
me too. But that's part of the game, right? Like,
sure, absolutely.
You got to take some L's to even know what a W is, right? So it's like, honestly, that's like for me, that was the one thing when I even said to you initially about the experience thing. It's not even, like I said, it's not that anybody's smarter than anyone else or anything. I just don't get scared when things start to go wrong, as long as it's not something fundamentally wrong with the company. If the market in general is going down, right, whether it be elections or whatever the case might be, I'm okay with that, as long as it's not like, oh, well, now Amazon or Apple sells children inside of their furniture, like Wayfair or whatever they got going on.
Yeah.
You know what I mean? Right?
Yeah.
As long as something is not fundamentally wrong with the company, then there is no reason. But when these other things happen, whatever the next catalyst is to send the market spiraling down, whatever it might be, there's a good chance it could be something insane. And, we'll be able to sit there and look at it. Like, that's why some people who they see the market now, there's probably tons of people just sitting there with money on the side right now. And they're like, I'm just going to wait till the next time this stuff starts tanking.
Yep.
There's both sides of it. There are people that are so happy. Like you said, you were shorting, right? You were so happy when it's going down. You're like, yes, there are people who are crying at home.
Oh, sure.
in their wife's arms, but it goes both ways.
There is always another side to it.
Yeah, definitely.
Well, guys, as we wrap this up, because we're definitely going on a little bit over time here, I wanted to get one more thing from you. For traders, whether they're day traders, short-term traders, long-term traders, what do you think if they say, Joe, give me some advice if I am trading? What is the best advice you could give a trader? Go for companies that Don't, there will be times that you will catch something in a mom pop stage, and maybe it'll blow up, but that is not really what is, so many people tell me, this penny stock, don't buy anything that's under $1. Don't buy anything that's small. I stay away from things that have like one-hit wonders, like pharmaceuticals. Usually when you hear the news, I don't want to just say all the pharmaceuticals at once, but I personally think you should stay with well-known companies, things that are in the Dow, things that could be, that are, you do not see potentially failing at all. And, I would also say, don't call margin. I know that, I do the total opposite of that. But I would say, like, if I was saying my little sister, I would tell her, I would say, don't, you don't want to make it as less gambling as possible, and go with the reputable company that handles your money. Great.
That's pretty solid. Yeah.
Well, listeners, thank you so much for checking out this episode. Definitely reach back out to us, as we do want to have Joe back up on this podcast.
Definitely. Thanks, Joe, for coming on. This was really great. I feel like we all learned a lot. We had a lot of good discussion.
Thank you. It was very, honestly, it was nice to have the conversation with you guys as well.
All right. And we'll see you all next week.